Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Friday, TGIF, everyone, and it's May 6th and post Cinco de Mayo. So hopefully you guys aren't bogged down too much by the margaritas and cervezas last night. So anyways, today's the big day. We got the jobs numbers brought to you by the Bureau of Labor Statistics today, so we'll jump right into it. So non-farm payrolls, we had 208,000 new jobs created back in March. The forecast for April is 203,000. It came in at measly 160,000. On top of that, the previous 2 months, March and February, actually lowered by another 19,000, so they revised even lower. So that kind of gives you the viewpoint of where our jobs markets really is at. Unemployment rate, it stayed the same at from 5% in March to 5% in April, even though the forecast was supposed to have a slight dip. And then average hourly earnings went up a little bit, so that was kind of good. We had a 0.2% in March, and forecast 0.3 came in at forecast. So overall, decent number right there, but again, very disappointing. They were hoping to see non-farm payrolls up above over 200,000, and it came in again at 160,000. So what does this exactly mean? This pretty much leaves the Fed's decision in June basically almost comes to zero. The Fed funds decision, our futures, are basically saying 6% chance of them raising rates in June. Now a lot of people are kind of actually figuring that because of the global aspect, we got the election, we got job growth isn't quite where we need to be able to show a growing economy, that maybe the Fed may not raise rates until 2017, and if they do raise it this year, they may wait till the December one just to kind of show face that like last year, if they do it. And of course, that would be after the election in November. So if they raise rates, again, it may be December this year, or it could be moved on to next year, because we don't really show the global economies are, again, very not looking too good. Europe and China are still dragging. As we saw even earlier this week, Australia cutting their rates to stimulate, so it's hitting a lot of other countries as well. We got another thing that could be coming up later this year would be the Brexit, which is the Britain maybe leaving the European community. That's coming up in June. That could be definitely a market mover on the global scale, and how that could change things around a bit too. So that's something to keep an eye on. You can probably be hearing that about later this month as the decision comes up with the vote coming up. About Britain's having an election, about maybe pulling away from the European community. That could be a big thing coming up here as well. So right now the stock market's down. Of course, they're disappointed with the jobs numbers, and rightfully so. Bond market, we continue our uptrend. We had a nice, as you can see, this rally here pushed us upwards. So now we got new resistance here, a ceiling at 103 level. As you can see, we really haven't been up to the 103 level for a while, but every time we have, it's basically bounced down. And then I went back over a 2-year period. The last time we even broke above the 103 level was around December of 2014 and through to approximately February of 2015. We were just above it. So right now, these are pretty much the highest levels we've been at for a while. Most likely, this is a good point if you have any interest rates out there floating around. This would probably be a good point to lock in, as the chances of us going above the 103 level are going to be pretty slim. Again, it would have to be some very major market moving news for us to go above this, but right now we're kind of at the highest points, definitely highest points over the last year or so. So I would take cash in now if you had the opportunity. All right, folks, you guys have a great coming weekend. I hope this helps. But right now we still got this upcoming trend here, but we could have a little stalemate as we as time goes. We may go a little bit of a sideways pattern and maybe even dip down further. So the chances of us maintaining this for a long period is hard to say. All right, folks, you guys have a great weekend. Thanks so much for watching, and we'll see you guys on Monday. Take care.